Hello and welcome back to The Note. Let's take a tour of Eastern Europe today. There's obviously been very great and very specific concerns about the other regions of the emerging market, such as Latin America and Asia, with the result that Eastern Europe often seems to have been neglected. That's even though it is sitting right next door to the eurozone, which at least until recently was the centre of global concerns. Let's take a look at whether there is more that we should be looking at in Eastern Europe with our Eastern Europe editor, Neil Buckley. Neil, thanks very much for joining me today. Let's start by taking a look at stock market performance. This is according to MSCI since the very bottom of the stock market back in March 2009. It's perhaps surprised quite a lot of people to see that Eastern Europe has actually outperformed both Latin America and Asia. Are there good reasons for this, do you think?
I think there are reasons for it, particularly in recent months. When you look at Eastern Europe, the one thing that people are focusing on is the fact that outlook is improving, assuming we see a continued recovery in the eurozone. The big thing is the eurozone is the key determining factor. Eurozone provides the biggest export market, is the biggest source of credit for Eastern Europe. So we have to start everything by saying this all assumes that there isn't another leg down in the eurozone crisis. Assuming there isn't, then the growth outlook for these Eastern European economies is improving going into next year, assuming that we see the eurozone starting to pick up a bit as well.
But that's even though it's actually avoided catching too severe a cold during the worst of the problems in the eurozone. I mean, we haven't seen a concomitant financial crisis in Eastern Europe with the problems in the eurozone so far.
We haven't, although back in 2008, 2009, all the concerns were focused on Eastern Europe because they had very large external imbalances going into the financial crisis. But Eastern Europe focused on dealing with those quite quickly. You saw quite a lot of discipline in terms of getting public spending under control, getting external imbalances under control. Through 2009, there was also a coordinated aid package from the IMF and others, which helped Eastern Europe escape the worst consequences which were forecast then. But then we saw the eurozone crisis kick in, and Eastern Europe was affected by the collateral damage from that, if you like.
Okay, let's take a look on the subject of collateral damage. Let's look at how bond yields for Poland, the biggest of the Eastern European economies, have done. And you can see that for a long time it was rated by the market as being safer than the big peripheral eurozone economies, Italy and Spain. Should we be viewing this as any cause for concern? There's still no great worry about Eastern European sovereign debt, as far as I can see.
No great worry. I mean, in the early part of the year, really at the height of QE, latter part of last year, early part of this year, you saw yields fall to real lows, partly because you saw a lot of money flowing into markets like Poland in search of yield. Then there's been more of a convergence in recent months. There's a bit of concern about the effect of tapering down the line on countries like Poland. There's also been a bit of a change in the political situation there. The government is lagging in the opinion polls to the more conservative Law and Justice party of Mr. Kaczynski. That's produced a little bit of concern among investors. But there's no real concern, particularly over the Polish sovereign. It's just been these factors have taken some of the shine off its very, very good performance earlier in the year.
Okay, now, and finally, we have one interesting chart which we produced a few weeks ago when we had Russell Napier, a very famously bearish stock market historian. His point was that in terms of gross external debt, there are a bunch of Eastern European countries that were not being closely attended to, which did look as though they had worrying levels of debt. Do you think that's a reasonable concern, looking at the names like Hungary and Slovenia and Croatia on this list?
I think it is to a certain extent, although of course the top country on that chart is Greece, and Greece's problems are very well known, so that's not a surprise to anyone. I think there has been a focus very much in Eastern Europe on government debt, which generally is manageable, and less perhaps on total gross external debt, which is shown here. And you can see that in places like Hungary, it's very high. Slovenia, of course, Slovenia is being talked about a lot as a potential bailout candidate because of its banking problems. But Croatia, I think what this really shows is that there's a bit of a divide in Eastern Europe. The northern countries are in much better shape. The southeastern European countries like Serbia, like Croatia, the former Yugoslav states, Public debt, gross external debt is higher, and those markets are still riskier than the ones in the Central European core, if you like.
Okay, Neil, thank you very much indeed. Okay, I think the takeaways from that quick exploration of Eastern Europe are reasonably clear. There are many subtleties, but ultimately Eastern Europe should be regarded by an investor as a geared play on the eurozone. If there is another crisis in the eurozone, then obviously the region looks vulnerable. If, as many people are now betting, there isn't another leg of the eurozone crisis, then Eastern Europe does look quite attractive.